about to get it started. Alright, family. Welcome to another edition of Melody Gamma News. We're going to go ahead and get it started. The date is September 3rd, 2020, and at the time of recording, it is 4:05 a.m. I'm getting ready to head out to work. Alright, let's get it started with the markets. The S&P futures are up 4.25 points to about 12, just under 0.12%. The Dow futures are up 78 points to it's about 0.27%. Nasdaq futures are in the red right now, down negative 6 points to about 0.05%. Russell's 2000 futures are up 1.80 to about 0.11%. And I'll switch over to, let's go to FTSE 100. They're trading right now in Europe. They're up 45, looks like 45.69 points, fluctuating to about, they're up at a total of about 0.76%, and that's fluctuating because the markets in Europe are open right now. Okay, the Asian markets, the Nikkei 225 is up 218.38 to about plus 0.94%, almost a full 1%. All right, to get into the cryptocurrencies, the Bitcoin US dollar fluctuating right now down about 3.42%. That's $3.42 to about $11,403.61. CMC Crypto 200 is now down $13.76, by 5%, just a little bit above 5%. All right. Alright, let's get into some currencies. The GBP to the US dollar is down by negative not much, by 0.0042. Alright, the Japanese dollar to the US dollar to Japanese yen is fluctuating right now because remember the Asian markets are open to about, it says fluctuating right now to about in the positive territory to about between 0.105 and 0.095. Okay, it's fluctuating. Okay, all right. The VIX is up to about 26.19. That is a plus of 0.007. The 10-year bond is at 0.6510. All right. Alright, to the euro to the US dollar is down to 1.1822. Alright, let's get in. Crude oil is down negative 28 cents to about $41.23 a barrel. Gold is up. Gold is down negative $2 to about $1,942.70. Silver is up. No, silver is actually down by a penny, $27.39. Alright. So let's go ahead and get into some news over here. This is coming from MarketWatch.com. The Fed's Claudia says new inflation fighting strategies has root in failure of old approach. All right, this is a big article, so we skip down. This is coming out. This article came out on August 31st on Monday. All right. Richard Claudia, Vice Chairman of the Fed, laid out the reasons why the bank broke with decades of tradition last week to adopt an inflation strategy that could result in interest rates staying low for longer periods. That means you're not earning any money or anything. All right. No longer will rising or falling unemployment rate, he said, largely dictate the Fed does, what the Fed does. Nor will the Fed raise rates simply because inflation rises 2% or higher. Instead, the bank will seek to ensure inflation averages 2% over an extended period. Now, when you go back and read this, and it's a part right here. Instead, the bank will seek to ensure inflation averages 2% over an extended period. The Federal Reserve is a central bank. They've come out. They've come out and admitted they are a bank. They're not supposed to be a bank, but they said in this article right here in this line I just read that they are a bank. All right, we have a central bank, and we're not supposed to have a central bank in this country here. This is one of the things that they fought. The older generations fought for, not to have a central bank, but they admitted that they are a bank, and they are tinkering with the economy. They're not supposed to. All right, and then they got over, says they would they keep inflation. They would try to keep inflation at 2% or higher over an extended period. They've lost control. They're desperate. They're trying to keep inflation over 2%. But as we can tell, some of us who grew up in my prime came in the 90s when I was coming of age, and we can walk to the store on our own, and you can tell the difference of what happened to the price. So inflation 2%. It's been way beyond that. All right, I'm gonna skip down here. Yet in bound part that dictates the traditional approach, the central bank from 2015 to 2019 lifted the Fed's fund rate to a high as 2.5% from near zero level that long prevailed in the aftermath of the 2007 and 2009 Great Recession. The cost of many businesses and consumer loans were tied to the funds rate. Instead of increasing, interest rate conceded with the decline of the U.S. employment from 3.5% from 5% to a rate historically associated with higher inflation. All right, the inflation during the period remained remarkably low. However, only brief breaking above the bank's 2% target in 2018. All right, based on the Fed's preferred PCE price index. All right, the Fed probably won't raise rates quickly or as sharply as they did in this new strategy been in place. Claridia implied. I could be butchering the name, so I'm really sorry. All right. It goes down a little bit more. Like I said, this is a big article. All right, and I'm reading one last line. The inflation average less than 2% for a long period. The Fed will be willing to let inflation rise above 2% for a while. All right. They've admitted that they're a bank. They admit that they got it wrong in the past on how they judged, on how they got the market, and they said they should have never raised rates. But that's it. That's it for that one. But something heavy is going on with the Fed. They don't know what's going on. They desperate right now to try to keep this thing going. All right. We'll switch over to more real news, more numbers coming out. The real numbers from John Williams, ShadowStats.com. All right. This is as September. This is coming out September 1st. All right. The latest on top of the upside revisions to May and June activity. All right. Yeah, this is September 1st. Nominal July 2020 construction spending declined. Spending gained It was gained 0.1%. All right, in the month. All right, up 0.7%. Net of revisions was down by negative 0.1% year to year. All right, in real terms, the Census Bureau, September 1st Census Bureau, in real terms, the net of related inflation, total construction spending declined by negative 0.5% in the month, down by 2.2% or negative 2.2% year to year. Broadly consists of the annual decline of 4.3% or negative 4.3% in July 2020 construction payroll employment, and consisted with something less than an L-shaped post-pandemic shutdown recovery. All right. The dominant positive component in July activity was residential construction, up by a nominal 2.1% in the month. All right, up 2.4% net of the revisions. All right. So these numbers are coming in, and we see that more numbers are being revised, and that the real numbers show a steep, sharp decline across the board. All right. Some gains happened, but for the overall net, it was down negatively. All right. So these numbers keep coming in, and they keep trying to feed these numbers. But when they come out with these numbers on these news networks, these fake news networks on TV, people these suits and ties, suits and dresses, skirts, whatever. Just wait for the real numbers to come out. They come out in weeks, sometimes months, sometimes many months later. They'll go back and revise and show the real numbers. All right. Our final story comes from ZeroHedge.com. Sound money is key to defending our liberties. All right, that is a big deal. All right. All right. The title of this article emphasized what Austrian economic Ludwig von Mises, he lived from 1881 to 1973, called the sound money principle, as Miss put it. All right, the sound money principles have two aspects. It is affirmative in supporting the market's choice of a commonly used medium of exchange. It is negative in obstructing the government's propensity to meddle with the currency system. All right, remember that one. It is negative in obstructing the government's propensity to meddle with the currency system. Remember, the positive, they would help. On negative, that means a sound money system will keep the government coming and meddling with stuff. And further, it is impossible to grasp the meaning of an ideal sound money if it does not realize that it was devised as an instrument for the protection of civil liberties against despotic inroads on the government's part. Ideology, it brings in the same class of political constructions and the political constitutions and the Bill of Rights. All right. Keep on going down here. All right. Fiat money is economically and socially destructive, with far-reaching and seriously harmful economic and social consequences, effects that extend beyond most people would imagine. Fiat money, inflationary, it benefits a few at the expense of others. It causes boom and bust cycles. All right. It leads to overdebtedness. It corrupts social morals and paves the way toward the almighty and powerful state and towards tyranny. We on that road right now. All right, we don't have a sound money policy. We have a bunch of fiat currency just being constantly printed up. All right, and they're beginning and arguing right now why slowly we're losing our liberties. All right, for all intents and purposes, the United States is no longer it's never been a democracy. It has been a theocracy, and right now we're a fascist state, the merger of corporate and state powers. All right. Making money great again. Return to sound money policy. We skip down in the article. All right. What needs to be done? What needs to be done well? The challenge is at hand. Making money great again. This requires first and foremost ending the state's money production monopoly. The state's money production monopoly, and opening up a free market in money. The free market in money means people will have the freedom to choose the kind of money they wish to use, and what people have the freedom to provide their fellow men with alternative goods that may serve them as well as money. All right. That's one of the principles. All right. That's one of the things that needs to happen. A sound money policy. All right. That's the only way we're going to get out of this mess. But unfortunately, they've screwed the pooch so bad. If you look from the 1913 Federal Reserve Act, it's 1913 and 1914 Federal Reserve Act, where President Woodrow Wilson and a few senators went ahead and passed it over the Christmas holiday, over Christmas break, and we've been downhill from ever since. Went from the Great Depression in the 1929 all the way to 1955, and we've been going downhill ever since. And any attempt to get rid of the Federal Reserve, the central bank of the U.S., has resulted in people losing their many lives. There have been attempts to get rid of them, and we've been hurting for economic policies ever since. All right. The only way we get out of this crap is having a sound money policy and having it being enforced. All right. So that's it for today. Thank you for joining us for another edition of Economic News. If you like what you see, like, subscribe, and comment. Hit the notification bell. You'll get it when we pop up with news. All right. Thank you for joining us. We'll see you around. Take care of each other, family. All right. Be one forever. All right. Let's get it started.